Super good afternoon and welcome also again. My name is again Henrik Løvig, equity analyst at the ABG Copenhagen office. Next on the stage we have Kåre Wigh, Group Executive Director and CFO of North Media, and also Henrik Løvig Jensen, CEO of North Media Online. The company will present for 20 minutes and then we'll have a Q&A session afterwards. Thank you very much for your time today, gentlemen, and I hope all the participants will enjoy the presentation. Thank you.
Thank you, Laurits, and good afternoon to everyone, and welcome to this presentation of North Media in Denmark. Please go to the next slide for the agenda. My name is, as Laurits just mentioned, Kåre Wigh. I'm Group Executive Director and CFO, and with me today is also Executive Vice President Henrik Løvig. Henrik Løvig is in charge of our digital platforms. We have prepared a 20-minute overview of North Media and thus many things to cover. So let's go to slide number 3. So North Media at a glance. We facilitate transactions between businesses and consumers. We provide platforms to connect retailers with consumers, landlords with home seekers, employers with job seekers, and distributors and home care staff with private households. We focus on Denmark, a market providing excellent conditions for all our activities, but we're also active in Norway, Germany, and Sweden. In Sweden, we run the home rentals platform BoligPortal. A common feature for all our activities is that we handle data and large volumes uniformly, quickly, and securely. We constantly optimize our businesses to further take advantage of these scale benefits. As you will appreciate from the slide, we have two business areas, last mile and digital services, combining the characteristics of a value business and a growth business. The business area last mile is a mature, stable, and market-leading business, well set to continue to generate substantial earnings in the years to come. FK Distribution distributes more than 1.3 billion leaflets and facilitates more than 100 million digital views of leaflets. The second business area, digital services, that's the headline for 3 database businesses with a potential for double-digit growth, higher earnings, and scalability. 2 of the digital services are already profitable and generating double-digit EBIT margins, and the third business is well on the way. Next slide, please. We have a strong and growing capital base, close to 750 million DKK by end of Q2. And to maximize returns, we place parts of the capital resources in blue chip securities. This capital structure ensures maximum flexibility and independence for the long term. It allows us to pursue strategic ambitions, including ambitions, acquisitions, and investments. And the financial strength also facilitates distribution of stable dividends to the shareholders. This year, we paid out 5 kroner per share. Provided our guidance for 21 is met and our ambitions for 22 and 23 are fulfilled, we have the ambition to continue to pay dividends of 5 kroner for the years to come. This equals a dividend yield of 4% based on the current share price. Dividends are the focal point of our value creation to shareholders, combined with occasional share buybacks. And the share price? Well, last year the share price rose by 80%, and this year the share price is up some 58%. Our main shareholder is the company's founder, Mr. Richard Bunck, and the free float is approximately 35%. The shareholder base is growing. Approximately 15% of the shares are held by international investors and particularly Swedish investors. Next slide, please. The strong capital base is a product of solid earnings and cash flows as underlined in our recent Q2 results. Consolidated revenue in Q2 was 259 million DKK, and revenue was up 2% over last year, where we saw some impact from the close down of Danish business life and society amidst the corona pandemic. Last mile recorded 1% growth, while growth in the digital services was 13%. Group EBIT came at 68 million DKK, and the EBIT margin improved by 4 percentage points to 26.1%, driven by efficiencies, cost savings, and better product price mix. 3 of the 4 businesses are profitable. FK Distribution and Ofir delivered solid margin improvements, while BoligPortal sustained its high margins despite introduction of freemium products and higher marketing spend. Net profit from the group, excluding return on equities, was 51 million DKK, a decent improvement over last year. Including return on equities, net profit in Q2 was close to 100 million DKK. Overall, results were largely as expected, and we made good progress with our strategic priorities. Now, let's dive into the story behind these numbers, starting with FK Distribution on the next slide, please. Q2 revenue in FK Distribution was up 1%. Distribution volumes were stable and prices were slightly higher than last year. EBIT in Q2 was 62 million DKK, an improvement of 8 million DKK, driven by cost savings from ongoing optimization of operations. A landmark event was the expansion of a contract with Deutsche Post, where we more than tripled volumes. We started packing leaflets for 480,000 households in northern Germany on July 1st in an eco-friendly packing solution. Now, this is no game changer in financial terms because the real money lies in the door-to-door distribution, which Deutsche Post continues to handle. This year, Deutsche Post will account for around 1% of the total revenue in FK Distribution. But the agreement is a seal approval of FK's effective packing setup, and we hope the agreement could be a stepping stone for additional international business. Initially, we're exploring the potential for packing up to 2 million households in Germany. 6-month revenue was down 3% at 431 million DKK. Q2 was solid, while Q1 was softer because border shops, shopping centers, and minor customers rescheduled campaigns during the Danish COVID-19 lockdowns in January and February. Half-year earnings were 124 million, and we succeeded lifting EBIT margin by 2.3 percentage points to 28.7%, despite the lower top line. So all in all, satisfying results. Let's go to the next slide, please. Packing and distributing leaflets, local newspapers, and direct mail in Denmark remains FK Distribution's core business and accounts for more than 90% of revenue. The remainder is digital offerings and logistical services for third parties. For the past several years, printed matter volumes declined by 8% per year, approximately, driven by retail consolidation, increased online shopping, and mergers of local newspapers. This year, volumes are down by 4%, reflecting that we expect a lower structural decline in volumes going forward. Large supermarket chains, electronic chains, builders, merchants, and other large retailers continue to rely strongly on leaflets to drive customers into stores. In fact, volumes from the bigger customers this year are either unchanged or even higher than last year. And we have recently extended our existing agreement with one of Denmark's leading retailers, Salling Group, through 2024. Oppositely, smaller customers reduce volume. They may be more exposed to structural changes in retail, or they may have been hit harder by COVID-19, forcing them to reduce marketing spend. Moving to full year outlook, we narrowed the guidance range in May and upgraded guidance in August. We see full year revenue between 865 and 880 million DKK and an EBIT result of 235 to 245 million DKK. Please go to slide 8 with Henrik and BoligPortal.
Thank you, Kåre. BoligPortal is the leading property rental platform in Denmark, and we have an emerging presence in Sweden. Right now, we are refining our business model and we are introducing more subscription-based products and services. And we're also giving away certain products for free to add more landlords and rentals to the new platform. I'll dig into the revenue streams a little later. And as outlined in our annual report, these changes were expected to leave a mark on performance in the first half year, and they did. Growth was 1% in Q2 and 3% in the first half year. This is somewhat below the growth rates that we've been grown accustomed to in BoligPortal, and which we eventually expect to return to once we have refined the business model. Despite these changes, we were able to produce a decent profit margin of 35.5% in Q2, while the profit margin in the first half year was slightly down to 31.8%. This corresponds to an EBIT result of 13 million DKK, which we do believe is a good result. Next slide, please. A few words on the changes we are introducing to BoligPortal. Basically, we're in the process of expanding our addressable market by adding 3 new revenue streams with significant commercial potential. And that's on top of our current marketplace. Together, they hold the potential to secure BoligPortal a larger and more stable and predictable income and cash flows in the future years. The marketplace remains our focal point. We match home seekers with landlords, and all housing units on the platform are fully validated. We're using data from the marketplace to develop and launch new subscription products and services. The first new revenue stream is centered around data. We know the market inside out and have more than 110,000 rental moves a year in Denmark. That accounts for 50 to 55% of all the transactions in Denmark. We know where demand is, we know what potential tenants are looking for and what they're willing to pay. And we have the same insight into the supply side. So currently we're launching a new subscription-based online solution combining all data on demand and supply with information from public registers. And one of the first subscribers is the Danish Central Bank, and we believe this solution will be in demand among developers, real estate companies and managers, banks, contractors, etc. So we help them make wise decisions when it comes to property investments. The second new revenue stream is subscription-based services designed to help landlords administer their properties and portfolios. The services span advertising, market data, and rental management solutions. Basically, whatever the landlord needs to run his business effectively. And the third and last new revenue stream is centered around service providers. We offer solutions to tenants who found their new home on our platform. We offer access to electricity, insurance, and internet providers by now. And we see good traction and high conversion rates from the tenants here. And all the service providers pay us a fee for each reference that they get. So we strive to have more landlords and tenants on our platform as part of the combined ecosystem. And this is also why we're giving away certain products for free when we launch new revenue streams. We're slightly behind our plan, and we've lowered the guidance for this year accordingly. We now expect the full year revenue to come out between 90 and 94 million DKK with an EBIT result of 29 to 31 million DKK. Despite the slight downward revision, we continue to target top line and earnings growth compared to last year. And we expect double-digit growth to return later this year. Next slide, please. If we look at our job platform, Ofir, we had an excellent Q2. Revenue more than doubled. Q2 was actually the 4th consecutive quarter with high double or even triple-digit growth, as you'll appreciate from the figure to the right. Ofir has invested heavily in its infrastructure and data platform to develop a comprehensive job universe where vacancies are being posted on several job portals and social media channels, supported by our large candidate database. This approach allows us to target both active and passive job seekers in a unique way. Ofir has outgrown the market in recent quarters, and we continue to strengthen the market position and service offering. Revenue growth in the first half year was 84%, and progress was driven by higher volumes of job postings at better prices, whereas income from software licenses continued to drop as expected. The half-year EBIT result improved to a profit of 3 million DKK, corresponding to an EBIT margin of 18%. And this is the best ever result for Ofir. This year we originally targeted 36,400 job ads, but we may now be looking at around 40,000 job postings. Based on this forecast and the better than expected results, we updated the full year outlook in August. revenue is now expected between 31 and 34 million DKK. That's 50 to 60% growth over last year. EBIT outlook has been raised to 3 to 5 million DKK, and Ofir has now entered a phase of profitable growth, and we are still far from realizing the full potential. Next slide, please.
Thank you, Henrik. And just to recap, this was two of the businesses in digital services, BoligPortal and Ofir, and I will now cover the third business in digital services, BeKey. BeKey supplies digital access solutions to two customer segments. Home care serves municipalities in Denmark and Norway and accounts yet for most of the revenue in BeKey. The second segment, stairwells, represents the growth potential in BeKey. Stairwell caters to home deliveries of groceries and parcels, as well as property administrators and others with legitimate business in secured multi-story buildings. What we do is we install a chip, we call it Smart Relay, in the entry phones of the secured stairwells. And this allows our customers to enter the building and deliver goods to the end user's doormat, even though the end user is not at home. Smart Relay is now installed in 25,500 stairwells in Greater Copenhagen. This equals to 57% coverage, and we target 60% coverage by year end. While we are not satisfied with the speed of new installations, the existing coverage is sufficient to support expansion and attract important customers. In the first half year, BeKey implemented an agreement with one of the leading online supermarkets, namely .com. In the first half of 2021, revenue was down 18% due to customers' postponement of planned projects. Last year, we onboarded 3 municipalities. This year, we had planned to implement expansion of 3 existing municipal customers, but these implementations were postponed, leading to this lower revenue. Uncertainty about implementation impacts full year guidance, and revenue is now expected between 26 and 30 million DKK, with an EBIT loss between -7 and -6 million DKK, thus in line with last year's result. Next slide, please. We are now around 6 months into the new 21-23 strategy, which we launched in February, and we can start adding check marks to some of their priorities and ambitions. FK Distribution extended its cooperation with Deutsche Post. Packaging for adjacent markets is one of the efforts targeted to offset the modest structural volume decline. Other efforts include new products, developing new offerings, and strengthening the digital activities. Scaling and potential internationalization remain important strategic layers for our businesses in digital services, supported by potential acquisitions. All 3 businesses reported progress with the scaling agenda this year. BoligPortal is in the process of expanding its addressable market by rolling out the new platform. Ofir has a solid growth in private sector jobs and continues to strengthen social media and data research capabilities. BeKey added 1 important client in the stairwell segment on its way to gain critical mass. Our ambitions for 22 and 23 are intact. We continue to target 3% organic growth driven by digital services, while the group EBIT margin is expected around 24% in 2023, excluding acquisitions. Next slide, please. Regarding the outlook for 21, we adjusted the forecast in May and just recently in August. We now expect group revenue to come out between 1,015 and 1,035 million DKK, is more or less on par with last year. We now see an EBIT result of 250 to 265 million DKK, hence earnings are expected to exceed last year's record result, driven by progress in both business areas. The guidance upgrade in August reflects higher visibility for FK Distribution's demand post-COVID, Ofir's better than expected results, as well as the minor downward revisions made by BoligPortal and Ofir. The outlook is subject to COVID-19. Currently, the pandemic is well controlled and doesn't materially affect Danish business life. We assume this will also be the case in the second half year. Next slide, please. And finally, a few takeaways from this presentation today. North Media has two business areas, combining value and growth, predictability and potential. We expect full year revenue to exceed 1 billion DKK, and we expect an EBIT result of more than 250 million DKK. We are thus well set to improve earnings for the fifth consecutive year. The new strategy is well underway. We have the financial resources to support our strategic targets and aspirations. And it remains our goal to produce attractive shareholder returns, including a dividend of 5 kroner per share in the years to come. Next slide. And this marks the end of our presentation. We are now ready to take your questions.
Thank you, Kåre and Henrik. Maybe perhaps a question on the slide where we left up. You have 800 million in a positive cash position, which creates some flexibility, but around 200 million of that is earmarked acquisition. Could you talk a little bit about the companies that FK Distribution, well, actually not FK Distribution, it's more targeted towards North Media Online. What type of companies that you're looking for to acquire?
Yeah, Henrik?
Yeah, our main aspiration is to find companies that match the companies that we already have. So basically, we would like to find companies that can fuel the separate strategic goals for our online companies. So it would be within the areas that we operate in by now.
And that could also be international companies?
We are looking in Denmark and abroad, yeah.
Okay. And if we look also on your dividend policy, obviously you're increasing your earnings in your guidance by about 4% relatively to last year. You're targeting around a 3% year-on-year organic growth for the next couple of years with a stable margin. So that would indicate perhaps a 3% increase in earnings also. Is there room to also increase the dividends accordingly over time next to, let's say, the rates of that you've communicated? Is there leadway in these dividends if you do hit your targets?
Our target right now in the long-term plan 21, 22, 23, as I mentioned before, is that we plan to pay out 5 kroner per year for these 3 years. That would be 4 years in a row with 5 kroner per share. That's the target we aim at right now with the ambitions laid out for the coming years.
Even if you grow 3% or for all of those years?
Yes.
Okay. And perhaps just a last question. We talked a little bit about the BoligPortal, and that company has been in the media recently with your scaling of activities and your freemium model. Could you talk a little bit about just sort of your rationality behind the freemium model and this penetration of market that you want to pursue? And also accordingly with that, what we see is that there is sort of pressure still on the rental market in Denmark, but also on the job market, which Ofir is exposed to. Could you talk about how you're perhaps helping solving those issues in both BoligPortal and also in Ofir on the workforce?
If we look at the general market trend, I think that the job market is somewhat better off than rental market right now. The job market in Denmark is very hot right now. We see a record number of job listings. So of course I'm happy that Ofir beats the market growth for now. When it comes to the rental market, we see a slight downward trend in the market. If we look at the number of transactions, we don't see the same mobility as we did a year ago. So we have, I think we have a slight downward trend on the rental market. But it's also important to understand that the rental market is a more stable market than the for sale market is. If we look at the raison d'être behind the freemium model that we run in BoligPortal, basically what we strive to do to is to have as many properties on our platform as possible. And then if we offer something for free, we harvest data, and when we harvest data, we are able to sell more data products to the property investors, and we are also hopefully able to generate more rental contracts and have more revenue from service providers on the side. So that's basically why we do it that way.
That's a very clear explanation, Henrik, and we look forward to look at how the numbers perform once it's completely rolled out. But I'm afraid that's all we have time for today. As a friendly reminder to the participants, we have investment coverage on the introduced platform on North Media, and feel free to reach out if you have any outstanding questions. I know that Kåre and Henrik are always happy to discuss their company with new investors, so don't be shy to reach out. So by that, thank you so much for joining us today, Henrik and Kåre, and to all the participants. Have a great rest of the seminar.
Definitely. Thank you.